Andrew, I think you wanted to share some of your thoughts on reform of tax relief, specifically inheritance tax reforms.
Yes, Lisa. That's an awful lot of money we're borrowing, and on the assumption we can't borrow that forever, I'm going to share with you a few of my thoughts on what might happen. So I'm sitting here with my crystal ball and my watch to try and do that in less than 5 minutes for you. Again, the experts reckon that to get public finances broadly back into balance, the government needs to raise about 40 billion. Now, if we did that with income tax, that's putting income tax up 8%. And I think that's probably politically and economically unacceptable, particularly when they've got the triple lock in there, which is the commitment not to raise income tax, VAT or national insurance during the life of this government. So that means you're really looking at capital taxes. When we look at capital taxes, there's essentially two things you can look at: reliefs or rates. If we look at reliefs, there are actually 1,190 different reliefs on the tax statute books at the moment in 2019. These cost the country, the taxpayer, 159 billion, and the top 10 of those cost 117 billion. So obviously that's, something the government can get their teeth into and raise some significant sums if they choose to. Looking at capital gains tax first, the Office of Tax Simplification have recently been asked to look at this, and I think there are one or two things that we could see changing there that have been suggested. For as long as I've been in practice, any gain on your house, your private residence, has always been tax-free. But again, I don't think we can necessarily assume that's going to be the case going forward. There's an argument for that if you're moving up the property ladder because you need your money to buy the next house. But actually, if you're moving down the property ladder and releasing equity, then is it necessarily fair on the younger generations that that element of the gain should be tax-free, or should there be some tax on that? At the moment, throughout our professional life, assets have been uplifted to their market value on death. And again, there's a suggestion that that should be changed so that inheritors acquire assets at their original cost, not necessarily at the date of death value. Entrepreneurs' relief has already been tampered with a little bit by the government, and this is basically giving tax relief to those selling business and other qualifying assets, reducing their capital gains tax rate down to 10%. Now again, in the last year, there's full statistics available. There are only 46,000 taxpayers actually claimed that, and they had £27 billion worth of gains and paid only £2.7 billion worth of tax. They've already reduced the amount of relief on that, and again, it could change further. Politically, it's probably more acceptable. There's relatively few people there, and it does have the advantage that those people do actually have some money, so that helps. Rates, again, there is talk about moving capital gains tax rates to income tax rates. That used to be the case some years ago, and then they flipped it to make them lower rates. At the moment, the effective average rate of tax collected under capital gains tax is about 15%. So if they can get that closer to 25%, instead of raising 9.5 billion, they'd raise about 15 billion. So, that again is quite an easy achievement to probably get at least a quarter of the tax take they want to by just aligning income tax and capital gains tax rates. Inheritance tax is the next big capital tax issue. And again, there is already an Office of Tax Simplification report out there. And again, an all-party parliamentary group have actually looked at that and made a report with various recommendations to Parliament. So there are suggestions in there. And I think for me, if I was the Chancellor, I think unlimited reliefs for business and agricultural property relief, I think they're difficult to justify in the current environment. Why should someone be able to pass on £200 million worth of assets when somebody with £1 million estate is having to pay tax? So, for me, I would be possibly putting limits on those. There has been talk about putting lifetime limits at a much higher level, perhaps saying, right, instead of the £3,000 annual gift and the unlimited gifts out of income, you maybe have a lifetime allowance on a 5-year clock of say 30,000 a year, whether it's out of income or other assets. And the quid pro quo for that is that you perhaps simplify the tax at death. You abolish and limit a lot of the reliefs, and you reduce the tax rate from say 40% to 20%. So overall, it would be a lot simpler, a lot easier to collect. People would probably go to less great lengths to avoid it if it's a more reasonable rate, and they would probably raise more tax. So again, I think we could see simplification and elimination of many of the reliefs, but possibly a slightly lower tax rate in its place. The other outliers, I think, a little bit are wealth taxes. We don't really have a wealth tax as such in this country. Many European countries do. The French equivalent of wealth tax raises about 6 times as much as we get from inheritance tax, for instance. And again, if you look at that, if you say, right, we're not going to tax houses that people live in, and we're not going to tax pensions because that's politically unacceptable, it doesn't actually leave that much wealth. But in terms of sort of equity, is that something they might want to do? Because there is quite a lot of money tied up in bonds and ISAs and things like that that wealthy people are effectively paying no tax on. So again, it's a possible target, but I think would be quite complicated and expensive to collect and probably raise relatively little amounts. And the other area we could see some changes in is pension reform, I think a little bit. Again, often talked about, do we continue to get high rate tax relief benefiting mainly high rate taxpayers, or is there a more average rate applied that everybody gets the benefit of at less cost to the exchequer? And again, does that 25% that we can have out tax-free get impacted, perhaps reduced or eliminated? That's me pretty much run up to my 5 minutes. So there you go, Lisa.